Hello guys, and welcome back to another YouTube video. And today we're going to be doing top-down analysis. I'll be starting from the weekly time frame and working my way down all time frames in order to get a pinpoint entry of where I want to see price go for the euro going into next week. Okay, so grab a notepad, take notes, and let's break it down. So we're on the euro here. This is a weekly chart. And what I like to do before I take any sort of position, understand my weeks, I want to know where my external range of liquidity is, okay? And it's something called a dealing range. So from this low here all the way to this high, it's very evident that price is stuck in this range from that high to that low. And price has struggled. We tried to take it here, as you see, at a 1.12 psychological level where price came into, and we couldn't get the strength from the buyers to actually break above and take those highs. And as you can see, price rolled over, and now we're coming down to the downside. However, price is now coming into the lower half, into something we call discounted price. Price is now at just below that halfway line. So what we could potentially see happen is price is going to react some way. As you can see, when price come into the 50% before, we came all the way down to these lows, and then we see price push up and gain strength and come back into the upper half. Now price is back in this zone, and now I'm going to look for opportunities and areas where we can potentially price actually market reverse and come out of here and push higher. But also at the same time, understanding that there is lots of bearish momentum right now, we might have to come further down and then we see price push up. So that's what I'm going to be looking at and taking in consideration going into next week. Also, what I like to mark up is, let me get rid of this, is my weekly highs and weekly lows. I think these are really important. So as you can clearly see here, we have we call this previous weekly low at this price, bottom there. As you can clearly see there, that's the previous weekly low. And then previous weekly high here. Previous weekly high at. Now these are really good. I like to draw these in because these are really going to give me a clear indication. Are we going to take sort of the weekly range? Are we going to take the weekly high or weekly low? And we can look on a smaller time frame to see what's more likely for us to sweep and take. And therefore, coming into Monday, Tuesday, Wednesday, we really get a good narrative of where the weekly candle is going to close. Because if you look at the history of the weekly candles on the euros, more time, every candle either takes the weekly high or weekly low. It's just a known fact. There's wicks in the market. We see price wick all the time. We're going to see potentially this happen, okay? So taking that in consideration, I want to see potentially we take the previous weekly low, previous weekly high. Now on a weekly time frame, it's kind of just looking at what we have in front of us, what we can see. A very clear and evident thing what I see running through here is that we have this area of imbalance here, and price is actually just coming into it. As you can see, that weekly imbalance where price hasn't actually came back and filled this gap in a very, very long time. So now price is in there. It's interesting zone, and we're going to see some potential rejections from here. Also, what I like to see and highlight is potential weekly candle liquidity pools or sell side liquidity. So we have this sell side here, sell side liquidity at bottom right, and we also have this sell side here where we could potentially see price melt and sweep all this out from the market. Is also an option. So it's also just good on a higher time frame to note that there is price points here and we could actually see price attack them. We've got sell side liquidity resting all along here, maybe just like so. Okay, so taking this into next week, this is kind of what I'm seeing, and I'm just focusing on what I see in the now. I'm not trying to focus what's happening all the way over here, all this noise. I'm just trying to focus on, let me actually zoom in so it's easier for you guys. I'm actually just focusing on what's happening here on the now. Let me just put that there, clean it up a bit. Okay. Also on the weekly chart, what I see this massive weekly imbalance here, which is going to be enticing. People probably want to come back and fill that at one stage. And also, of course, buyer side liquidity resting above here. Buyer side liquidity at here. Okay. So I've now got so much here, so much I can play with, so much I can kind of look at and potentially see price do. I'm more interested in when I go into lower time frames, and as I trade as a day trader, I'm interested in this pre-weekly low, pre-weekly high, of course, and also taking into consideration that we do have, so also it's a bit low there. We do have these areas in the market here that we want to see price also attack. So no, it's very, very interesting, cool, and now we can go down on smaller time frames and see what we're playing with. So it's going to daily. So the daily time frame, this is what we see, okay? So once again, these kind of weekly price points, they don't really change, if I'm honest with you. They don't really change. And obviously, you see that that's the weekly imbalance there. That's the daily, or that's the weekly buy side that we could potentially attack. We've got this lovely double top here. And obviously, this is the price taking that. We've also taken out this order block in the market here on the daily, which is, so that daily low there. We also just swept that there, so it's sell side liquidity at there. That has been swept from the market clearly, and price pushed up. But we have got all these other price points here in the market, and what we're going to see price do. For me, it's more likely that price, just looking at this right now, is going to come back and sweep the pre-weekly low, and then we might attack this pre-weekly high and actually come up higher. Just sort of from a narrative on the daily point, that weekly balance price range, I can now kind of use that there as that daily just to refine it a bit. But apart from that, everything's looking fine, everything's looking good. And now we're just going to really see on the lower time frames where we're going to see price go from here. So let's jump on the 4 hour. So now on the 4 hour, yeah, it's a lot more evident of what price is doing. Let me just zoom that in there. Put that there. Okay, let me just bring that in here. And bring that in here, okay. Like I said, looking at that previous weekly high, previous weekly low, we now got a price range in itself. Let me just do this in here like so, okay. And what we're saying is that this is a premium area and this is a discounted area. So we really want to be looking for sales in this area. And what price has done is clearly came into a discount area and see price push away. To add confidence into this, we see price give us a breaker structure to the downside. So price is still in bearish order flow. If price was to take this high here last week, it would indicate to me that price has swept these lows and given us a market structure shift. Price on the higher time frame haven't actually shifted the market structure. So therefore, we need to take that into our lower time frames that price is still very bearish. Even though we're coming into these zones, you've seen previously, we've actually been ignoring order blocks, imbalances on the euro. So it's heavily bearish right now, heavily bearish, and we need to take that in consideration. Another confluence that I can see here stacks up is this imbalance here. Let me just mark that on. Oops, I don't know why it's playing up. There we go. This imbalance here, as you can clearly see. And what we see happen here is price actually comes into that perfectly, and we get a strong rejection away from this zone, okay? And also what we have is a swing high, swing low, and this is the weekly range. From that swing high here to that swing low, you can clearly see that we came into something called an OT, which is optimal trade entry between the 0.62 and 0.79. So price has came into an optimal area in the market, and so we've seen strong rejections from this level. A strong sellers are strong from this level, and as soon as they came into this inefficiency, bang, they kicked back in again, and sellers stepped into the market, and we came down lower. So now adding all these confidence in, it's going to be the probability of us taking the previous weekly high without taking some sell side, which the nearest draw in the liquidity is the previous weekly low. It's going to be extremely hard for, I think, for buyers to step into this market and take the previous weekly high and shift the market structure. There needs to be some sort of sell side swept from the market, sweep of that liquidity to then actually target some buy side in this market. So therefore, my narrative and my bias going into next week is to target the previous weekly low and attack that sell side. Now this is on a 4 hour chart, beautiful. We can even go down even further on a 1 hour and actually try to look at a pinpoint entry. So now on a 1 hour, this is beautiful. Actually, my go-to chart pattern has appeared. Okay, let me get rid of this here so it's a bit more clearer. What I like to do and how I like to trade is something called accumulation, manipulation, distribution. Essentially what I look for price to accumulate in the market, okay? I look for price to manipulate those highs and distribute in another direction. This is what I call my left-hand side. And this is everything pre the trade, okay? Take this in consideration. This is everything previously. When price has done this and we get a market structure shift, everything else for me is systematic. I can't think too much because price has already told me where I want to go. Okay, so once I see this accumulation, price market structure shift, all I want to wait for now is price to come back up into some sort of zone here and then sell off. And like I said, this is already pre-done for me. So which means once I draw in my fib, it should be in some OT level, and there should potentially be some sort of area of imbalance running through here that I want to take a trade off, and I'll look to take a sell. So taking that into consideration, taking that narrative, let's look what happened over here on the left-hand side on the hour, okay? So we came into this key area in the market of inefficiency in the market and into OTE level. We see price accumulate. Price is moving sideways in this market, as you can clearly see here. Price is ranging. We're seeing this choppy market structure. What we see with this one candle is price manipulate. A strong bullish candle sweeping into these inefficiency here. You would expect price to continue higher, but no, what do we get? We get reversed on the market and price absolutely melts to the other side. And what we see price do is give us a market structure shift in the market after giving us a sweep of all these liquidities here, which is don't want to work for me for some reason. That's fine. Okay, so now we've got that into consideration. We've got the sweep of liquidity, and let me just draw this in. So we see price come into here, we see price range in the market, sweep up, push down. Okay, now if I was to show anyone this as you see on here on the right hand side, we're literally doing the chart pattern that I normally like to see. So now all I'm waiting for price to do is pull back into our key levels in the market. So from swing high to swing low, I can start drawing potentially some OT levels in here that I see price going to reverse back into. Let's say price, for example, market open, price starts moving up from here. I then have my low point in the market, okay? Now that is one confidence. I've got my OT. This is where I potentially want to see price pull back into in order to take a trade. What we'll also get as well is I've got this lovely area of imbalance in here. As you can see in there, like so, we've got this beautiful area of imbalance, inefficiency, that I want to see price come into. Another thing, or another confluence, is also this sort of breaker block in here and this order block. This here hasn't been mitigated or come back into. So this is another confluence for price to come back into, tap back into these levels and look for sells. So on a smaller time frame, I'll wait for price to pull back into this level, and I might even see another smaller time frame market structure shift in here, and then look for sales, because price is factor. What happens on the hourly chart happens on the minute, 5 minute, etc. 4 hour. And we might even see another scenario where we see another market structure shift and price come into here. And that's where I want to look into get into this market. It's where I zoom in, and I zoom in one more time on the lower time frames. It's a bit hard for me to kind of gauge that with you right now because price hasn't developed. But essentially, same thing what I'm looking at here. I'm now going to zoom in, and I'm going to look for the same thing happen in here. So it's like price is zoomed in and zoomed in one more time on the lower time frames on the 1 hour. And when I come into my 1 hour inefficiency, 1 hour zones, I then look for that shift again. I'll look for that price to sweep, and the same principle applies. I'll look for the OTE of this move, and I look for inefficiency of that move. And then that's when I look to get into the market. That's when I look to take a trade, and that is my position there. And that's when I can have my tight stop losses, when I can put them above these highs. And that's when I can target my 1/6s, and that's where I can get my free standard deviation TPs, and that's just sweeping out these lows. And how I've been, like, when you're able to magnify one more time into these 1 hour zones, 4 hour overall zones, you start getting extreme accuracy with your trading, extreme accuracy. And it's helped me massively in my trading. And also, if you want a sort of more swing approach, you can just look to get in at these levels here, but your stop loss have to be above these highs because you're not waiting for a smaller time frame shift. And as you can see, the risk reward just comes a bit harder. It's still a fantastic trade. You're hitting a 2.47R. You're giving yourself a massive, not to say a massive big stop loss, but you're giving yourself a big stop loss, which allows you to breathe. It allows you to be less stressful in the markets. But I just find with sort of my sort of style of trading that when this comes into play, it works really well. And another thing as well is I call it so this is my entry strategy, and then I've got exit strategy. I will always look at points in the market. Let me get rid of this, where I want to look to get out of it, okay? So it's all good knowing when you want to get in. I've got getting in. Getting in is fine. Getting in is here. But I also want to know when I want to get out of the market, and that's just as important. When you know when you want to get out of the market, like I said, it's just as important. Now I will look at these levels in the market. I'll look at taking out these lows here potentially, that being one price point. Hopefully there's some sort of Asia range in this zone as well, which I'm looking to target on the smaller time frames. Price might come into here, and we've got like Asia range, and we sweep the buy side of Asia range, or coming back down, etc. All these key important things that I look into. I would then look at potentially this low as sort of taking 25% off, and then look at this low as taking another 25% off here, which matched up with my 1 standard deviation of sort of the move extended. And then I've got my 2 and 3, and I might just take another 25, and that'd be my whole 100%. So say if I started off with easy maths, 100 lots here, I would then take 25 lots off here, and I'm left with 75. Then I take another 25 lots off at this low, then I'm left with 50 lots. Then I take another 25 lots off, and I've closed 75 lots while the trade's moving in profit. What this has enabled me to do is, if a trade was to reverse, at least I bank profit and I'm risk-free, which means capital preservation is so important. It allows me to basically, that's basically it. It's helping you with capital preservation and just protecting your capital. And risk management is so important. And it just helps you really kind of get as much out of the trade as possible, in my personal opinion, because you're chipping away at your position, reducing your exposure while banking profits. And the market's so unpredictable. This setup could work and it would be fantastic, but then it could also fail. And I'm preparing myself for worst case scenario. Many traders think as soon as they enter position, that's it, they hit drop gold and they're going to make lots of money. I think the opposite. I think when I enter position, I think I could potentially lose money here. How am I going to protect myself? How am I going to protect my risk management? How am I going to protect my exposure to the euro right now? Okay. And I do so by banking profits when price comes into profit, taking my SL to break even, and letting the trade, if it is correct, breathe. And when price is heading in my direction, I'm chipping away at basic price, and chipping away at the profits and banking it until I've hit full TP. And yeah, it's such a great way to trade, and that's my exit strategy. Then I also got my entry strategy, two different things which are so important. But guys, this is a wrap to the video. This is my sort of analysis going into next week on the euro. I hope this has helped you. Hope you've taken some away from it. And guys, don't also forget, I do have a VIP group. If you do want to come involved and see how I trade on a daily basis, it's only 30 quid per month. Feel free to come in and have a look at sort of the trades I take during the day, trades I don't. I'm going to start going live on there as much as I can going into next week. So if you are interested, there'll be a link in the description there. Click on it, come in, join the team, join the brotherhood, join everyone who's going to come together and just tackle the markets together. That's what I'm trying to build there. I don't really need anyone to join the group. I'm doing it out of course passion, love. I love what I do, and it helps people achieve what they need to achieve. So yeah, if you do want to get involved, it's in the description there. I'll be posting my stuff there. I kind of like doing it as it's almost set as like me journaling myself. When I post my chart analysis in there, when I update the guys, I build that community. It kind of motivates me to do what I do, motivates me to post every day, and it helps me journal my trades, and it keeps me accountable. It really does. When I have to post trades every day, not that I don't post trades every day, but if I know that I've got people in there in the group, got a brotherhood, and it keeps me accountable by I know that I have to basically show up and make sure that I'm following my training to my rules. and I'm not slipping, I'm not messing, I'm not doing anything that I shouldn't do. And that's really, really important. And the group's helped me with my accountability, and it's almost like every single day it's a lesson for me as well. So I just love doing it anyway. But you want to join, description below, in the link, click it, and yeah, it's £30 per month. So yeah. So wrap to this video. If you want to see more videos like this, please like, comment, and subscribe, and I'll see you in the next video.